Investors and traders, welcome to the channel Market Chart Pattern. Today is 9th of January 2024, and I hope everyone is having a great day. We are going to take a look at the key US stock indices as we always do for this video segment. And as always, this video is for educational purposes only and is not a financial advice. So we'll start by taking a brief look at the different markets. We'll just go through the summary, and then we'll begin to dive deep into the stock indices, and we'll also take a look at the standard deviation tables. Okay, so bonds were slightly up, not very great action, but nonetheless they finished the day in the positive territory. The dollar was stable, a little bit higher. Your USD lower, but not by a lot. USD JPY, again the dollar index was stronger. This was stronger today. And the GBP USD, which had been the strongest of all these pairs in the past quite a few trading days, was actually lower today. And looking at the gold was quite unchanged, and silver lost about 0.62 percentage points. Crude oil, so energy, look at the energy complex. What a change from yesterday in the crude oil. So crude oil actually closed in the positive territory, up 1.85%, or $1.31 a barrel. And the natural gas, look at this has been phenomenal. It was about up 6% yesterday, and it closed 7.4% up today. And looking at the US stock indices, S&P 500 today, quite a few of these are actually in the negative, and the only one positive is Nasdaq 100 by about quarter of a percentage point, and the weakest of all the indices is the Russell 2000, which is for the small caps. Okay, so I will now have a look at this is the standard deviation table we were looking at yesterday. I forgot to put it this chart on in the video, but I did provide the levels in the description. And here we were looking at the -1 standard deviation in the ES around 47.64. The market came very close to that. The NQs, again, this market was very close to this as well. I think it just went a little bit lower. Dow was something similar. Russell 2000, I believe it went actually below -2 standard deviation. So we'll just have a quick look and we'll do a recap. So I will now take a look at the S&P 500. This is the cash daily chart for the cash S&P 500 index, and what we are looking at is this bigger ABCD. There's still a chance it might get we might reach it, but where we are now, it's really important and critical. And if we actually take this low out, 46.79, then it means that we could have further downside. And per our analysis, which we did over the weekend, I'll put a link to it towards the end of this video, we are looking for a low to come in next week. So just start looking at some of the timing aspect, whether it's going to happen or not. We'll wait and have to see. Okay, let's take a look at the ES E-mini futures. Here we go. Here, something really important. Let me actually blow up this chart. Here we go. So these orange dotted lines which you see, these are actually market profile levels, and where we have actually closed today is right at the bottom of this market profile, and also very close to 61.8% Fibonacci retracement around. So the close or the top was around 4800, 47.99 thereabouts. Now what is key is that how the market is going to trade tomorrow, and tomorrow we have the CPI numbers, and there is a possibility, because of the 61.8% Fibonacci retracement, also we are at the bottom of this profile as well, that perhaps there is a chance this might actually be high. And if, depending upon the fundamental data coming out, the price action actually might take the prices lower. So we'll have to wait and see. And if the situation is otherwise, the numbers are what the markets like. So sometimes actually good news is bad news. then the market would actually also explode higher and actually go and go for these highs here. So we'll have to wait and see. One scenario is the bearish scenario, because we have taken out this low, the swing low out. We want to actually lower, and now we are just retracing back into it. There is a possibility that we might actually go and fill this gap as well. And just quickly looking at this, we have structural support around that area. This is going to be, I'm looking at a worst case kind of scenario. Here we go. And just if we were to draw an ABCD, here we go, just projecting it from here, we also come very close to that. So that is one possibility. Again, just throwing out certain scenarios out there, but a little bit too early. Tomorrow CPI data, tomorrow's trading price action is really vital, but right here where we close today and close negative, it is a resistance level. Let's take a look at the NQs. So this is the E-mini, Nasdaq 100 E-mini daily chart. Here what we are looking at is market went right to the 61.8% Fibonacci retracement. And again, just as what we were looking at in the ES, worst case scenario, I think we are, if this turns out to be a strong resistance point, again CPI data tomorrow, we have some structural support coming right here where the gap is, and that is also a one-to-one price projection. Here we go, and that of course assumes that the market actually finds resistance from the 61.8% Fibonacci retracement, goes right into it. I'm going to delete these because these were what we were looking at that time, and the market did reach there, so it served its purpose. Let's quickly take a look at the Dow E-mini future. So this index is a little bit different because it never took this low out, so it's never really confirmed a downtrend, in other words, by taking out the swing low, but it has completed this ABCD pattern and it's just gone nowhere. And finally we'll take a look at the Russell 2000. So the Russell 2000 is also trading at critical levels, so right found its resistance right at 38.2% Fibonacci retracement. Now one of the things is that in strong trending markets, the resistance can, a strong resistance can come in from 38.2% Fibonacci retracement. So again, a lot of these markets are actually trading at really critical levels, and it will be very interesting to see the price action coming out of the markets for tomorrow. Now I am going to give you the standard deviation figures for tomorrow. So just bringing that up, 1 second. And here we go. Let me actually put the ES chart on, and let me just bring it over. Here we go. So I will also be putting these in the description, but these are the levels for your visual presentation. So thank you very much for watching the video. Good luck and good trading.